Hi everyone, hope you're all doing well. Welcome to the video today where we're doing the UK portfolio review. So this is a video series that I've done on the channel for many years, and it just helps you guys track along with my portfolio, the position sizes, how everything's doing, and also you guys can check in every couple of months to see what's going on. And also I can't hide anything. If I bought it, it's in this portfolio. If I sold it, it's not in the portfolio. So everything is on record here. And I've done this video series, like I said, for a very long time. I do it every 3 months on the main YouTube channel, but every month I do an update on the Patreon. So if you do want to see more regular portfolio updates, the place fee is on Patreon. Join in the link in the description. Only £5 a month, and you get 2 exclusive videos a week, and it helps support the channel. And you can join the Discord that has 600 members on to talk to about stocks, including me. But let's get on to the UK portfolio and how it's all doing. So overall, yeah, I'm pretty happy with how it's all going. There's only really one stock that I'm a bit unhappy with at the moment, but the rest of it, yeah, to say, you know, how awful it's been with inflation issues and the 2022 stock market crash, everything's doing quite well, holding on quite well. We've seen some good recoveries in a few things, and in the longer term, in the next kind of couple of years, I really do expect a good, I'd say 75–80% of this portfolio to do really well. And that's, you know, as an investor, if you're towards that end of the spectrum, obviously you'll probably do quite well, and I feel like the portfolio is quite well positioned. I'll try to spend a minute or two on every company and kind of give a mini update on what my thoughts are with them. Obviously, I did the UK stocks I'm buying video only 2 days ago, so you guys obviously got a good update there with my thoughts on the stocks that I am actively buying. So I'll keep them a little bit brief, but for ones that maybe I haven't mentioned for a while, you can kind of get my updated thoughts as well. So let's start at the top with Airtel Africa. So this is currently up 15%. Over the last kind of 12 months, I've particularly tried to make this a bigger position. Do really like this company between its 4G growth, its mobile money, 2 really good incomes there. And I think in the industry they're in, they'll do very well in the next few years. The stock, however, has been absolutely devastated. It did really well through when we were having the stock market crash in 2022. But realistically now, it's actually doing a little bit poorer, down 27% as you can see here. And it does trade at 16 times earnings. Now, the reason why it's probably been held back on the share price and why it actually looks quite high on a P ratio is because of the currency impact. It's been hurt massively with currency impact at the moment, and that makes the profitability look a lot lower, and I think that's what's hurt the share price. Now, once these currency impacts are gone, this company is actually going to trade at a relatively low valuation. I would say it's probably going to be trading at like 4 or 5 times earnings, which is not bad at all, and also a lovely 3% dividend yield to pick up as well, which as well, by the way, even though I've held this stock for around about 3 years, and I've been averaging up a ton on in that time frame as well. This portfolio doesn't include dividends received, so obviously I'm up 15%, but considering I've held this stock for 3 years, I probably obviously got a few more dividends that would probably hike that up a lot higher as well. So worth pointing that one out. ASOS down at 67%. I bought ASOS as I thought, okay, this is looking a very good opportunity. What I didn't really realise with ASOS is how much the CV boom was helping them and how much that devastated them afterwards, and that really brought a lot of sales forward. The inflationary pressures, the costs, especially like shipping costs, the exact same with Boohoo, and competition aspects like the Shein entering the space. I thought, okay, it's worth buying this one now. And if you look here, you know, obviously the stock is from where it was in 2021 to where it is now. It's down like 92%. And that's a lot for a company like ASOS. You know, you would only associate that with very high risk investments, but this is a relatively, you know, well-known company in the UK that's down this much. And for me, obviously I'm down a fair chunk on this. I think I'm down 67% on this, but I was, you know, looking at this kind of the average that I have it at, and I can't remember exactly what the average I have it at. I don't know if it's around about there-ish, maybe it was a little bit higher. Yeah, that must be about my average there. As you can see there, I bought this relatively low. You know, I bought that around about £10-ish a share. And, you know, that was, you know, when you look at the historic levels, that it's only been those, it didn't even get that low in the CV times. It didn't get that low when it was going through its last financial problems. It didn't get that low in 2012 when there was the double dip recession fears going on. It didn't get that low. It's not been that low really since like the 2010-ish. So I thought I was buying this at a really good level, and even looking now, I think if they do get to some amount of profitability, it does look incredibly cheap. But obviously that's the big thing, because it's been out of profitability for so long, people are valuing this as a lot higher risk now because of that factor. So if it does come back to the old levels of profitability and get to some decent growth, I mean, I will do well from this position, but obviously at the moment that's why it's so low. And we'll see what happens with ASOS at the moment. Alpha Wave, obviously, that's doing quite well, up 10% on that position, or 9% on that position. Aviva down 3%, obviously a relatively new position this year. I'm mostly buying this for the dividend yield, which is currently sitting around 8%, which once again won't get factored into the share price there, but that's why I'm buying that one. It's very much a similar position to like Legal in general. Brand Development, I'm down 1% on that position. Obviously, this company could go through a bit of pain for the next kind of 6-12 months. House sales probably still be weak going forward, so I am ready for pain on that one, and that's why I'm not actually actively buying that one at the moment. I believe actually they've got their accounts. By the time you've seen this video, they're actually bringing out an update, so obviously the stock might move on that one as well, so probably worth bearing that one in mind. Boohoo, very much like ASOS. I mean, I didn't think it would go this low, but it has, and the reason why is because it's gone out of profitability, so everyone's valued this at a very low valuation because of that. But I mean, realistically, you look at, I mean, just to put it in context, like how low Boohoo is, it's lower, it's 50% lower than where it IPO'd nearly 4 years ago now, which is absolutely crazy to put that into context. But I mean, just to show you, I mean, it's a 442 million market cap. I mean, if they're able to get anywhere close to what they used to do in profitability, even before the crazy CV boom. Let's go to 2019, for example. In 2019 they were doing around 60 million in profit. If they're able to get to them sort of levels in the next few years, it's 7 times earnings. So I'm still quite confident that I'll do okay in Boohoo because of that aspect, because of how cheap it is, and all I need to do is get back to profitability. But obviously it does sting a bit at the moment, and we do need to start seeing them turning around relatively soon. They've got an update in a month's time, so we'll have a better idea if that turnaround is starting to happen. If it's not starting to happen now, then I do get a little bit less confident on the turnaround, but yeah, obviously, let's see what happens there. K-Box down 9%, same again, doesn't include dividends. Obviously, the dividend yield on that is relatively high as well, so probably with the dividend, I'm probably up on that position. Yeah, I've been trying to buy that one because it just got absolutely slaughtered. And I didn't think it deserved to get slaughtered as much as what it did do. It did have some, an issue with the accounts, which it did sort out, which is fine. And yeah, it's been absolutely punished ever since it on the share price, and the company's still doing relatively quite well. Good balance sheet, obviously does good amounts of profit, revenue growth still pretty steady. Yeah, I think it's a decent company there. Card Factory up 121%, obviously being a very good performer for us. I've over the years trimmed this one for profit as well, and yeah, it looks like the company is going to be performing ahead of expectations, so should carry on doing very well. Dark Trace up 41%, same again as a bit of Barrett Developments. These guys are bringing out their full year accounts by the time you've seen this video, so it probably move on the share price from it. So I'll keep this nice and brief because whatever I say, the information is going to be outdated by the time you guys see this video. Forterra down 5%, very similar to Barrett Developments, being very cautious, could be a choppy 12 months, but I'm seeing if it does pull back and then I can buy some shares a little bit cheaper. We've got Flutter up 23%, yeah, obviously wanting to get some exposure to the US growth in the online sports betting in the UK portfolio, and Flutter was the choice. Could have been Entain, could have been Flutter, went with Flutter because FanDuel is absolutely smashing it. Jet2 up 33%. I've been looking at Jet2 and I've been thinking, what do I potentially do about that one? Obviously, the chairman, Philip Meeson, is stepping down from the company, which was my little bit of a worry here, but he is being replaced by Robin Terrell, who has been at Jet2 for the last 3 years, so obviously that's a pretty good choice. I think he's got good experience in the company, especially through the really tough CV times as well. I've been thinking, is there ever going to be a time where travel will be ever stronger than where it is right now? Travel has absolutely boomed in the last year. So is it the top? Is it time to sell? And then I look at Jet2 and I start looking at the revenue and profitability aspects and I go, it might be the top of the cycle of the travel boom, but it should hold up pretty decent. And I look at the valuation, it's just crazy low. So I think that if it was a bit of a richer valuation, I might consider moving out of Jet2. But relatively now, I look, it's not a bad valuation with all things considered. Greg's up 70%, obviously another stock that I hold for 3 years on the YouTube channel. Obviously I sold out half my position for 100 and something percent gain, obviously like a year ago or something, and I just kept the rest of the shares for a really good dividend yield. and a cracking company still. So yeah, big fan of Greg's, and held for a long time, as most of you guys know. Hollywood Bowl, same again, held this one for many years. Fantastic company. As you guys know, I did nibble some more shares in Hollywood Bowl, and yeah, I think it's great. And once again, collecting a good 5+% dividend yield on that one as well, which isn't factored into that share price there. Hotel Chocolate, probably the one that I'm a little bit more cautious of. The management team has messed up a bit there. They've gone from the point of view of going, yeah, we're doing international expansion, to no, we're not doing it. Then we are doing it, then we're not doing it. And it's just messed the share price up, and what investors are in this, what profitability they're going to do. So it's going through a bit of a transformation period now, and it's killed the stock for probably the next kind of 12-24 months, which is a bit annoying. I think that it still could do okay once it ramps up the profitability from all these impairment charges it's taking, and through messing about of entering and exiting countries, and it should still do okay. But I can't buy it because I think that I need to see a bit clearer path on where they're going, and they're actually deciding to stay on that path. And I don't want to sell it because I look at it going, I think it's too low. I think when they get back to decent amounts of profitability, the stock will recover, and then potentially then do I sell out of it because the company has messed about. And it's a bit surprising because the management have historically been good at Hotel Chocolate, which is the crazy thing. JD Sports, I'm up 12%. I want to buy more shares in JD Sports, but I'm looking at what's going on with the likes of Foot Locker, and obviously Foot Locker are tumbling massive, and I'm thinking, is that going to affect JD? Are they going to get pulled down a bit? Are they going to see weak US growth? Obviously, we've seen European part of the business has been pretty solid, but if there's another kind of weak, if sales are deteriorating like Foot Locker, will JD Sports get pulled down because of that, and then we see it cheaper, and then I can buy more shares? So I'm a bit 50-50 on that one. I keep thinking I'm going to buy more shares, and I'm thinking patience. If I'm looking at Foot Locker, will that weakness go into JD Sports and get it cheaper? Legal in general, obviously, I'm down 1% on that. Obviously not factoring in that I'm collecting, an 8% dividend yield on that one. So that's obviously, if I factored that in, I'd probably be up on that position a lot more than negative 1%. Yeah, just bought that as a very steady hold, as like Aviva. I'll collect a lovely 6, 7, 8% dividend yield on that one, even if I factor in a cut. And then obviously, I think when the concerns around the economy kind of disappear, I would expect to receive probably 30-40% share price appreciation alone in the recovery from that one. So yeah, that's why I'm buying that one. Money Supermarket, bit of a better size than probably when you last saw it. I'm building it up quite well. Would like it to be a little bit bigger. I'm kind of praying for a bit of a pullback at the moment, and if that does happen, but I think obviously with the comparison site between mortgages, looking at money accounts with higher interest rates, the energy markets come online, I think they've got a good few years in them going forward, and is once again collecting a lovely 5% dividend yield from there. National Express, I'm down 29% in National Express. I keep wanting to buy more, and then I keep weighing up, well, what if the company doesn't do what management are saying and they don't return to profitability? It's going to get absolutely stung on the share price. So I've kind of like got, the angel and the devil on my shoulder, and, saying, you buy it, it's really cheap, and if they hit those numbers, you'll wish you bought more. And then I've kind of got the other part of me going, but what happens if they don't hit the numbers? Then the market's going to panic and the shares are going to tumble massively on it. So don't buy too much in case of that risk element. So yeah, I think I'm in a good place where if it goes up, I can go, yeah, I benefited from that. Obviously, good dividend yield, and I think I'm in a place that if worst case scenario they don't return to profitability, I'll still be okay. Revolution Beauty up 67%. A little bit annoying because this was actually up a little bit more than this only a week ago. However, they brought out their full accounts and they peed off all their shareholders because they basically told them all the information they already knew, and the only thing that was new in there is that actually the balance sheet got a little worse than what we was expecting. So they peed off all the shareholders, and it was like, and everybody was waiting to see what they're actually growing at in Q2, because if you remember Q1, they came out with this crazy growth of 60+% revenue growth, and we were only expecting like high single digit. So everyone was like, whoa, and then everybody was like, okay, is it continuing to Q2? And they gave no more information, and in fact the guidance only once again was exactly what they said before, which is high single digit. So everyone was kind of going, well, where's this Q1 growth come from, and what you're growing in the longer term? So everyone kind of went, whatever, I'm taking my profit. So Revolution Beauty, take that as a learning curve. They were, that's not how to report your numbers. Supreme, obviously up at 11% on that one, collecting a lovely dividend on that one. Pick this one up because the company is a very, very good company, and also because of the vaping growth. If you look at vaping at the moment, it's absolutely booming, especially with the younger generation coming through. A lot of the younger generation, and obviously, year after year after year, a lot of the younger generation are vaping massively. And obviously, the risk comes around regulation, and that's the only thing I've got to be careful of. But the vaping space looks like it's going to be booming and booming for many years. It is safer than smoking, but I've got to say, like, looking at this article here, the new data showing how much, in the UK, how many young people are vaping. But, like here you see in the title, like, fears. And I look at that word, fears, and I'm thinking, well, all the data shows out at the moment, this is from the Cancer Research UK, all the data shows that vaping is a lot healthier than smoking. And then all of a sudden, right now, there's a lot of panic about, vaping, and it's like, the only really big thing that needs to be monitored is that obviously, people are vaping crazy amounts a day, and then that's actually having the impact on the health. So I guess that's the only thing that is the concern out here about regulation and the amount that people are doing it, and then there's the health issues with it. So yeah, obviously you got to have some, be careful around it from that sort of aspect, but at the moment I can only see that company doing well. And then the last one is S4 Capital. So S4 Capital is down 53%, but I'm okay with that. You look at every other company. WPP absolutely slaughtered as well. The whole marketing sector seeing weakness. You look at Future, they've been absolutely slaughtered, nearly the same amounts of S4 Capital as well. So it's a whole market thing. It's not S4 Capital. There's weakness in the marketing companies at the moment, and S4 Capital's getting hit of that. But I think the company will still do very well in the long term once marketing comes back. So yeah, not much panic there either with S4 Capital, but I'm not really actually buying too many shares just because it is already quite a big position, but also I want to see them financials improve a little bit more before I do buy some more shares in S4 Capital. So yeah, overall relatively quite happy with the positions. Say that we've gone through 2022 stock market crash, a lot of stocks are doing obviously really well. I've got a few things that I could potentially buy, and the only two things that I need to I'm really looking at is to make sure that Hotel Chocolates sort it out a little bit, because that's the one company that I'm concerned about. And obviously ASOS and Boohoo move back into profitability, and then apart from that, obviously the portfolio looks absolutely amazing. So yeah, it's going well. There's obviously one stock that I'm a little bit concerned about, but apart from that, I think it's in a very, very good position at the moment, and I'm really happy with what's going on. So hope you enjoyed it, and if you do want to see more of a monthly update, get yourself on the Patreon. Thanks for watching. Hit that like button. See you in a bit.